Friday, May 30th. It's the end of the month, the end of May. We got our favorite Fed number, which is the inflation gauge. It came in line. So if you didn't have the threat of tariffs, just understand, if you didn't have the threat of tariffs with inflation in line, just spoiler, the Fed would be actually lowering rates. We're going to go over everything. I'm going to go over alpha picks. We've got a great set of alpha picks that a letter from them. When to sell a stock. When do you want to sell a stock? I've got a great little thing for you, and I'll go over a newsletter that I did on that one. Tariff trade. We'll talk about Taco. We'll talk about the whole thing, Besson in China. We'll talk about some stocks, who's going to be the next $1 trillion company. We're going to go over Costco. We're going to go over Estee Lauder, Celsius. We're going to go over earnings with Elf, Dell, Ulta, MRVL, Zscaler. And then next week, we've got 3 key earnings next week. But again, inflation in line. Let's look at the charts, because the charts will tell the story. Yesterday, it was kind of a shit show. What's funny, any reaction in the market is an overreaction. This was when the court ruling came out to the left here. Okay, this is QQQ. You saw through the morning, it just gave up, and then people sold the news. And why'd they sell the news? Because there are ways that Trump could get the tariffs back on, and that slowly made the news cycle. And then when the actual court decision came out about the tariffs being stayed and they can go back on, that's when the market said, you know what, we're going back to where we were. And look, we went back to where we were. So that's essentially what happened. That's the news cycle. That's the story. If you're watching 5-minute charts, you are trading. You're not investing. Understand that. If you're watching these things every day and you're trading in and out, you are trading. You are not investing. You are investing when you hold for long term. Okay. Even I would suggest even the shorter term, you are trading. You can't tell me that a fundamental is going to change in 3 months unless there is some catalyst or news cycle that comes along with it. So understand the difference between the trade and the investment. And what I found interesting was this newsletter, okay, from the irrelevant, I think it's Michael Batnick who does this. If you buy and hold a stock, at some point you are going to get your teeth kicked through your head, the back of your head. This newsletter was great, and it goes over numbers, okay? I don't know if I've got some type of Rain Man skill, but the numbers don't say you will be successful if you buy and hold stocks. It says you will be successful if you buy and hold indexes, or ETFs, but not individual stocks. And that's what this whole newsletter was about. I thought it was great. I thought it was a good read. I will lead off that with telling you maybe you should read that one. Because again, I may have gotten lucky. I don't think that the Mag 7, one of the things that I'm actually writing for this weekend, I am working on 2 paid newsletters. The first one is going to be a complement to the What If I Lost Everything? It's going to go over technicals. I went over fundamentals in this one, but I will go over the technicals. That's a newsletter in progress. The other newsletter in progress is, since we're at the end of May, it's going to be 5 things that I've learned through the first 5 months of this year that will help me beat the S&P over the next 7 months. And it's 5 really good things. And FYI, spoiler, I've got 2 bonus ones. So it's really 7 things that I'm going to learn. Okay. And that I've learned in the first 5 months. And I think they're solid. I think this kind of points out to it. Now, one of the other solid pieces of information and data that I have is the Alpha Picks portfolio. And if you didn't know what Alpha Picks is, it is a data-driven portfolio where if you sign up through my link, you get $50 off, but the performance is what speaks, okay? Nothing matters. I said it in this weekend or last weekend in the newsletter. Nothing matters but price. And the performance reflects price. 162% return versus the S&P at 57%. Okay, and the letter that I got yesterday and all the subscribers got yesterday, 82% of the Alpha Picks portfolio beat earnings. The portfolio is outperforming on a 3-month basis. It's coming back. So what Steve Kress says, 82% of the Alpha Picks have beaten earnings expectations. The S&P had 78% of the companies delivering positive surprises. After a tough March through in April, the Alpha Picks portfolio has rebounded with an 8.3% monthly return versus 0.45% for the S&P 500, signaling medium-term momentum. The performance period is particularly relevant because it reflects shifts in market dynamics, avoiding noise and potential reversals. Several companies have recovered significant losses, including AppLovin, which has soared nearly 30% since earnings announcement. Up 19% year to date. AppLovin is part of the portfolio. And if you're not an Alpha Picks portfolio subscriber and you don't want to sign up for Alpha Picks, just go over to this Wednesday's newsletter. I gave you like 7 of them. Okay? At APP, picked on 8/15/2023, up 780%. CLS picked 10/16, up 335%. EAT, which is still roaring back, picked 4/1 last year, up 224%. STRL, these are companies that I would never invest in if it weren't for Alpha Picks, but I do own the portfolio. Now you've got 3 picks that I said I would be buying right now. I own Wells Fargo. I own AppLovin. I have Berkshire Hathaway. I also, bonus, I own Credo as well. So if you want that, you can go over to my newsletter. Okay. And it is one of these newsletters. I'll include the link in today's newsletter so you can go and review it. Okay, it's very simple. And the key point with Alpha Picks, when to sell the stock. Because everybody's good at trying to find a buy, but nobody focuses on sale. So if you are a paid member of my newsletter, one of the ones that you can read is When to Sell a Stock, a collaboration with My Weekly Stock. And we go over like 10 reasons to sell stocks. This is from February 15th, last year, 2024. It still holds true today. If you're not a paid member of the newsletter, go over to my Twitter or just sign up for today's newsletter, When to Sell Stocks. When the facts change, when you need cash because there's a better opportunity, do not sell when the stock is overpriced. What is overpriced? A good business with expanding earning power. Other reasons, stock has gone up from my buying price. Stock has surged 50% in the last month. Do not sell when that happens. But if you need money and you think there's better opportunities, go and sell. Raise some cash. Again, it's a little cheat sheet. It's just meant to spur, I think our newsletter actually does a better job in more detail. But if you don't want to pay for my newsletter, don't feel like you have to. It's just a way to support me. Okay, so if you listen every day, maybe it makes sense to support. Now, what I want to point out, too, on this chart is the seasonality, because we're heading into June and many times you'll hear sell in May and go away. We're done with May. And so this last week, which was a 70% win rate over the last 19 years, 70% of those weeks were positive. We're heading into June, which only has 47%. So if you're flipping a coin, this is like blackjack odds. So if you've got some crazy gains from the last month, remember, I do think that we are range bound. And you're seeing here in the 4-hour, you got in at 458. My expectation is the 4-hour will get you out in the next week. Doesn't mean that you go and sell everything, but I'm waiting for more entries into the 4-hour algorithm. I love the 4-hour algorithm. Okay, let's talk about what happened yesterday. Federal Appeals Court issues stay on Trump tariffs. Here's the thing that you have to know. The stocks soon realized yesterday the court decision was nothing. It was a nothing burger, as the tariffs will be coming even if the court's decision gets upheld by the Supreme Court. There are ways to implement these tariffs. So if Trump wants the tariffs, he's going to get the tariffs. The issue is the markets hate tariffs. So the more you hear about tariffs, the more likely the downward pressure on the market is. The more likely you'll see opportunities to buy. Okay? And the market realized that if Trump wants tariffs, I'm looking over my notes. After you had all of this, then you had Trump meet with Jerome Powell at the White House. He summoned him to the White House. Now, it specifically said, the White House said, they didn't talk about monetary policy. How in the world is a man like Donald Trump, who at all, says these things in press conferences off the cuff, how is he going to hold his tongue in a meeting with Jerome Powell and not say, I want you to lower rates? How? They can say all they want, and there is no way Powell is going to come out and say, yeah, he asked me to lower rates. There is no way. You may see it in his memoir, but there's no way. So it was another nothing burger when Powell walked in there. Okay? The taco trade remains. The taco trade remains. Trump always chickens out. So he's now going on the offensive with China. Okay? But here's what you have to know about this. Discussed with Joe Squawka, and this is Ryan Dietrich. I love Ryan Dietrich. He comes out with these great charts. So it was a big May for stocks. And it's been a clue that the bulls are firmly in charge. Over 5%, like we might see in 2025. Then the next 12 months have never been lower and up 20% on average. Okay, we don't know what the next month is. The return in May, when you're up 5%, we don't know what the next month here is. We don't know what the 3 months is. We don't know 6 months. We don't know 12 months. But we have some data. 2009, 2003, 1997, 1990. You're up. The only time when you weren't up in 6 months was 1990. So is it a time to buy now? I think you're going to have a better opportunity. And the reason is because the China stuff is still coming up. And remember, Besant, U.S.-China trade talks stalled. Trump and Xi need to meet. So what would the trade be here? Well, it would be yin or yang. Okay, yin is the bull. The 4-hour algorithm has you out on yin. Over the last 24 months, the 4-hour algorithm, look at the performance. 68% on YINN, Nancy. Okay, this is the bull. It's 3 times leverage. You don't want to hold this over a long period of time, but it makes you 68%. The inverse, if you think that China talks are going to break down, the inverse, which has you in right now at 35, it's yang, Y-A-N-G. Okay, remember those, because you could trade these for a very good profit. Look at that. The last time these China trade talks came up, 80% in 18 days. So I think it's a good trade. I think it's a good trade. Just make sure you have your stop losses in. Make sure you know what you're doing. But I think that's a good trade. In a market that's at all-time highs, go and get little wins. And I think that's how you get little wins. The biggest movers in the market story, it's all about earnings. Alta was up 8%, UiPath up 11%, Zscaler up 4%, and then the biggest losers, Gap, American Eagle, and MRVL, earnings. And we've got earnings coming up later in the show. I'm going to go over the 3 earnings next week that I think are big, that I've looked at. But who's the next $1 trillion market cap company? Who is it? Because we've got some contenders. Remember, there are only 9 currently, 9 $1 trillion companies in the market. 3 of them, Microsoft, Nvidia, and Apple, are $3 trillion. They've hit $3 trillion. I think Apple may be dipping under there. But here's a snapshot of the 10 companies currently positioned. Remember, this is like a NASCAR race. So if you were going around in a NASCAR race, you would say Walmart is at 780 million. It's leading. Will they grow another 200 million? A new 200 billion in market cap? JP Morgan Chase, will they grow 200 billion? Do they have an opportunity? Go and take a look at these stocks. Go and take a look and see which ones you think. Costco just released earnings. It's still my favorite place to shop. Okay, my bet, my personal bet, I reviewed these, but my personal bet would be Walmart, Eli Lilly, or Oracle. Those are personal bets that I think reach the $1 trillion mark. Okay? Tesla is already there. Autonomous race heats up as Tesla's launch rattles Uber and Lyft. So FSD, Elon said last night that they are testing autonomous in Austin already. I think it's Austin or San Antonio. It's one of those Texas towns. But he said they're testing it without drivers right now, and it should launch sooner than expected in June. So it's a cordoned off area that has been pre-mapped. They're going to do it. It's going to be driverless. It's going to be remotely monitored, blah, blah, blah. He thinks that over the next year, me as a Tesla owner, I can send out my car to go and make money driverless here in Atlanta. Maybe it happens. Who knows? But Tesla's here. So the autonomous driving, it's kind of the shiny thing that people are looking at. I don't think that's what's going to make them a huge amount of money. Okay, because we haven't proven out whether the cost of maintenance, the cost of insurance, the cost of energy, meaning the electricity, we haven't proven out if Uber is actually doing a better job by paying drivers who have to insure those costs, or if Tesla is going to make it. So I don't think that Tesla is going to just run away with this. I do think that Uber's in a fine position. Okay, it's a little bit expensive, but when you take the 4-hour algorithm and you look at it, I would be using this range between 60 and 82. I do think it's a $100 stock. Okay, I do think it's $100, but I don't think Tesla takes this. What Tesla has robotics and AI. And I think that's what pushes Tesla up. Remember, both Tesla and Uber are in my core portfolio. So I believe in both those stocks. I don't think it's one or the other. But the autonomous stuff is starting to have just the rumors. And Uber's still a strong buy. It's not crazy. The valuation is not nuts. It's not nuts. It's actually less than Tesla. So don't throw out Uber and say, oh my God, it's out there. But on these dips, when you see an opportunity and you can buy it, I still want more. I sold some at 90. I trimmed. You know, when I see it lose confirmation like that, I trim. So that's what you want to do. Uber is not one where I'm saying, okay, I'm going to hold this one for 20 years. I have an exact range that I like trading this one in. And you can see it right here. So if you don't know technicals, you don't need to know. Look at the all-time high in 2021 when we dipped down. Okay, that's the support. Where has it provided support? It provided support in August. It provided support in December. It provided support in April. Okay, where's your resistance? At all-time highs. I said it yesterday, and I think this is the best thing that you can think about. When you get to all-time highs, you are telling somebody, the market is simple. When you sell a stock, your broker is trying to find a buyer. And when you sell at all-time highs, you are saying to somebody is saying, hey, I think this one's going higher. They are paying a price that nobody in history has paid for that stock. It's like going to a car dealer and saying, hey, I know the sticker price is this, but I want to pay more. So I don't think you throw it out, but I do think that Uber is caught in that range, and it's a hype range. One other one that I want to bring up is Costco, because Costco outpaced Walmart and Target again in the US. It's still my favorite place to shop. But when I look at Costco, I look at the quant rating and I say, ooh, it's a hold. I'm not sure if I want to buy here. I look at that 52-week range and I say it's between 788 and 1,000. Okay? I also look at the valuation. It's an F. Why? You're paying 56 times forward earnings on this one. I just don't like that. Growth, they're not growing particularly well. And when you analyze with AI and you go and look at the growth down here demonstrates robust growth with its revenue growth year over year at 6%, significantly outperforming the sector at 2%. This strong growth trajectory highlights the company's successful expansion. But it's got a D. I don't know why. Have no idea. There's nothing bad about it. But the growth is good. Profitability, fantastic. It's the valuation that keeps me out. Where would I like this one? Well, let's go look at a chart. Because at the end of the day, the price is all that matters. And look at that weekly chart. It's just been, it's broken down from that trend line. But does it gain it back? Maybe. Because look, the MACD's down here. The RSI is in no man's land. You can go and look at the 4-hour algorithm, which trades particularly well. It's not bad. It got you in at 966. You just got out of a 4% gain. It wins 50% of the time. It's a coin toss, 20 positions over 24 months. You make 85% versus buying and holding at 103. But you are constantly against all-time highs. Your all-time high on this one, 1,063. Let's go and look at, let's see where it is. It is 1,078. So do I want to buy that one? No. I want to find in this market ones that have pulled back that still have opportunity to grow. And Costco, for me, just not one of them. But I shop there all the time. Now, a couple of stocks, and I saw the CEO of Tanger Outlets on CNBC yesterday. And so I went back in and I said, you know what? I picked in the core portfolio, I picked Simon Property Group, and it has been fantastic. If you go over to Linktree, okay, and you go down here to Savvy Trader, you'll find the core portfolio. And if I go and look at, let's see. Where is my Simon Property Group? There it is. It's up 46%. Okay, since I bought it. It just sits there. It just makes money. It makes a nice dividend. It's got a great one. So I said, okay, well, what has Tanger done? Well, Tanger, SKT is the symbol. It's up 94% in 3 years. Simon Property Group is only up 69%. This is total return. So it includes the dividend. Are they either one of these two opportunities? Well, if we go over to Tanger, it's a hold in the quant. Why? Valuation's a C+, momentum's a C+. Here in the near term, it seems to have pulled back. Is it an opportunity? I'm used to trading this one, by the way, in the low 20s. It's now $30. 4-hour algorithm just got you an entry in. And they've got earnings coming up later in July. They've already passed them. But you can see the weakness right there. Is the consumer weakening? Well, let's look at it versus Simon Property Group. Simon Property Group, I'm used to trading in the low 100s. This one's at 162, and it's rising. You've got a gap up here to 170. These are ones you don't trade because they're not going to swing a ton. But you can get a very good dividend. Because when Tanger's dividend, 3.89%. Simon Property Group is yield 5.15%. I like both of them. Again, for retail, I think you can pick and choose which ones you want. Costco, to me, I'd rather fight something that's in the middle of its 52-week range, like Simon Property Group right here, which goes all the way up to 190, which was back in February, versus fighting all-time highs right now. It's just about where I think the opportunities are in a 52-week high. When you're in this range of the S&P, find the opportunities. One of the opportunities that Michael Burry said was Estee Lauder. Estee Lauder in this downward trend right here, it just broke out. 68.82. Let's go look at Estee Lauder. I don't think that the 4-hour algorithm does well on this one. It does better than buy and hold. Okay, buy and hold loses you 65% over the last 24 months. If you just use the 4-hour algorithm, you're down 40%. And by the way, if this one is turning around from a weekly, if we've started to make this turn and the 50 day is going to turn and we finally found a bottom on this, boy, that $56 that got you in April, that's going to be looking like a good buy. You've got a gap up here to 82. You got to make it past the 200 day. But maybe that's not a bad opportunity. Again, even in a bad market, you can find opportunities like that. Now, one that was, on my radar because people always asked about it for like the last year was Celsius. Well, TRENDSPIDER, the Weinstein indicator, and if you want to research the Weinstein indicator, go and do it. It is a tried and true indicator, and TRENDSPIDER has it in their system, so you can literally just look and say, interesting. It's just entered a new phase with the green candles, which is bullish. And maybe you want to trade that one. Let's see what the 4-hour algorithm in Celsius makes us, because it's been a bad stock. Okay, the 4-hour algorithm, again, it beats buy and hold. You lose 7% with the 4-hour algorithm, but you lose 18% if you bought and held over the last 2 years. And have we finally turned around on the weekly to an actual positive? Maybe. I used to say that we're in a GLP-1 and AI market. Well, yesterday, Goldman Sachs cut their forecast for the GLP-1 market. Okay? They think by 2030, it's going to be $95 billion, down from an earlier estimate of $130 billion. The reason? Pricing. And that's the issue. You're seeing pressure on pricing. It's as simple as that. So Eli Lilly, that has been a great company and has just turned in record amounts of revenue. Well, maybe that starts to slow a little bit, because at 52 times earnings, you're trading 33 times forward earnings. Their PEG ratio is great. So let's go and look at the growth. Well, they're growing year over year at 36% revenue. Fantastic. If that starts to slow down, the stock price doesn't get that multiple, so the actual price will come down. Now, when you look at this one, it is at the bottom of its 52-week range. It's one of those that has been high. I still say it's a $900 stock. But I'm not, full disclosure, I am not in Eli Lilly. I sold out at around $800, I think. And I've been out of it for quite a while. It is just not one that I wanted. But when you see it hovering around this $800 mark, and every time it's gone under $794, it's gone back up, maybe it's an opportunity. Your indicators are certainly low. So if you're into drugs, maybe this is one that you want to look at. Now, ELF was always on my radar because this was a crazy gainer over the past year or so. And we'll go and look at the chart. But yesterday they announced their earnings, and they announced that they're betting big on a new acquisition. It's called Rhode, okay? Rhode will launch in Sephora's US and Canadian stores. This gives ELF distribution. I like it. The street liked it too, because it's up 23% yesterday. Okay, it went nuts. I like it. But have we reached a bottom? Again, finding opportunities. The 4-hour algorithm, boy, that 53 was fantastic. Where are you trading right now? 111. That is doubling your money in just over a month. April 14th. Has it turned around? Well, look at the weekly. The weekly, this candle right here is a 30% candle on the weekly with the MACD down there and the RSI down there. Maybe the 4-hour algorithm actually works because it makes you 31% over the last 24 months. You're still up 23% if you've held on. Is it expensive? You bet it's damn expensive. This was a category leader. These guys were growing unheard of. 31 times forward earnings. Even when you enter in the PEG ratio is high. So for me, I'm not in this one. It's just too crazy for me. I don't want to deal with the volatility. And also, I have learned my lesson. I traded Ulta before and I lost money. And I'm like, hey, I'm sticking to my guns. But again, there's opportunity here. And if you want to watch charts and you want to learn about a business, you can do it through Seeking Alpha, through TRENDSPIDER. I'm showing you literally the tools how to do this. And if you go to my link tree, you've got right up top, you've got TRENDSPIDER, you've got the sale right here, $50 a month. Okay, you're saving 3%. The 32, I would urge you to get the premium. It comes with 2 training sessions per year. And if you want, we went over alpha picks, but there's a bundle. And the bundle is Seeking Alpha Premium, where you get to do all that research. You saw me clicking around there. You saw me doing charts. It's simple. It saves you $159 a year. Okay? Let's go over some of the earnings, and we'll just look at some of these stocks, okay? Dell killed it. I mean, I'm not going to include a story. They killed it. They absolutely killed it. They're down. They're down. They were up 10% on the news. If you go and look at a chart of Dell, when they announced these earnings, it was up 10%. It couldn't hold that gain. See how it went up and it went down? It's not holding. That's a sign that a market just wants to pull back. It's just unsure. It doesn't want to hold it. The market is focused on their margins. And when you go and look at your profitability, their margins are 22%. The sector's at 50%. That's what they're focused on. So the margin, again, if Dell went into this, we went over this yesterday. If Dell went into this earnings at $100 instead of $113, you'd see it pop to 113. If they went in at 77, you had the opportunity to buy this at 77. If you're buying this, above this gap and above this 200-day, where's your stop loss? I've lost money on this one. I went in at 113. I think I sold at 100. I took it out of the core portfolio. Don't trust it. The margins bothered me. Ulta killed it. Talked about beauty. I lost money on this one before. Ulta killed it. They're up 11%. Okay? Killed it on their earnings. Absolutely killed it. It's close to the top of its 52-week range, 469. That's going to open up at a 52-week high. Again, Ulta, leading beauty category. It's a great stock. I lost money on this one. 551. All the way back here in 2023. All the way back here in 2024. You're only at 469. Does it get back there? That's a double top. The double top was clearly a sign to get out. You've just gotten back over your 200-day. But you've popped up here. Is it too much? I don't know. I'm not in the beauty game. I learned my lesson. MRVL. This is a semiconductor company. They beat, but the guidance was light, down 4%. Down 4. Gross margins were lower than expected. The stock dropped 2%. It's now down 4%. Again, the valuation, expensive. You can analyze it with AI, and you can do all of this in Seeking Alpha Premium. You can see my favorites, Broadcom and NVIDIA. Both of them. AMD is a competitor as well. I own both NVIDIA and Credo, and I want to own Broadcom. Now, Zscaler beat on the top earnings per share and revenue with guidance light. Guidance was light on revenue. Stock was up 4%. It's up 5% now. The valuation is still a little stretched. 80 times forward earnings. Cybersecurity. Where's my cybersecurity bet? It's on Palo Alto. Zscaler might be an actual opportunity in cybersecurity because you're not at your all-time high. Your all-time high is back here at 357. You're trading at 260. I was just back in 2021. It hasn't come all the way back. Most of the other cybersecurities have come back. So maybe that's an opportunity. Again, you've got to find these opportunities in the market. Make sure you know what you're doing. And if you don't have tools like this where you can easily just go back and forth and say, okay, what do I like? Then get them. Get Seeking Alpha Premium. Get Alpha Picks. It teaches you how to manage your portfolio. Get TRENDSPIDER. It is a chart. You can get all of that for free. For years, I used Finviz. I didn't want to deal with the damn pop-ups anymore. I wanted the quant because instead of comparing PE from stock to stock and going back and forth and keeping a spreadsheet, I wanted to just go in and one click, I was able to do it. And I was able to monitor my stocks in the portfolio section. Okay, it is a great opportunity. This portfolio I'm using in this weekend's newsletter. The year-to-date change. These are the top 20 stocks year-to-date. What did I do? I went and researched what were the top gainers in the S&P, and then I asked Perplexity, hey, can you just pull out the symbols of these top 20? It did, and I imported it nice and easy. I just created a new portfolio and I imported it, and I'm going to take a look at those stocks for the paid newsletter subscribers. It's going to be nice and simple. I mean, again, it's an easy way to set yourself up for success. Now, earnings next week. This is Earnings Hub. I love Earnings Hub. After the close on Monday, we get Credo, which is the favorite, the top stock in Seeking Alpha this year. It's pulled back. Go and look at the chart. Go and find it. Then on Tuesday, you get CrowdStrike, which is at all-time highs. Going into earnings with all-time highs. We've seen that story before. Does it push forward? Maybe. I'd like it to go in lower. I've trimmed 50% of my position in this one. And then you have Broadcom, which I got out at like 170, 180 with a nice little gain. I'm not against it, but this one is trading like a monster. So you've got good earnings next week, but so far we are through earnings. And like Seeking Alpha or Alpha Picks said, Alpha Picks has beaten, 78% of the companies beat in the S&P, 89% with Alpha Picks. So make sure your portfolio is good going into this summer. That's going to be a main focus because for the past few years, sell in May and go away. It's been more like sell it in June because June was the top. And then July and August were total crap. So make sure you know what stocks you own, why you own them, and when you want to sell them. That's the key. Have a plan. Okay, if you have any questions, again, everything's on Linktree. Go and sign up for my newsletter because, again, I put everything in that newsletter. Everything, including the dog update yesterday, which I included Daisy's photo. If you have any questions, again, just message me. And by the way, the update on the dog, she's perfectly fine. If you made it this far, put a little heart in the comment section for Daisy because you listen to the whole thing. Okay, talk to you guys later. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.